welcome to Money, 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 your weekly personal finance date with me, Surabhi Upadhyay. This year's union budget contains several announcements pertaining to the housing sector, from a change in the definition of long-term with respect to immovable property to the introduction of TDS, or tax deducted at source if you're paying rent over a certain amount, to measures which were aimed at boosting affordable housing. Real estate was definitely a focus area for Finance Minister Arun Jaitley. But what do all of these announcements and measures mean for you, the homeowner, or maybe you, the prospective home buyer? Well, this week on Money, 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 real estate expert Anshuman Magazine as well as taxation expert Parizad Sirwalla joined me to answer exactly that. Well, it's great to have both of you into the studio. Of course, we have Anshuman joining in from our Delhi studios and Parizad is right here with me. So let me get opening comments with both our experts. Parizad, you go first. We went in with a lot of expectations, in the budget. But overall, what was your sense? And specifically for housing, is this good news for the individual?
So this was a budget immediately post the demonetization, which itself was a very radical event. So a lot of people had a lot of perhaps more than required expectations, and the middlemen or the middlemen category, which had perhaps borne the real angst of the demonetization implementation, had assumed that there would be certain tax stops for them, particularly in this budget, particularly salaried taxpayers. Overall, I feel the government has come out with a balanced budget. They have also had to factor in the fiscal prudence element of it. Also, one must remember, Surabhi, that this government has always been very clear with their intention, which is to, have more take-home pay in the hands of the lower income tax brackets. And of course, they have to compensate the revenue loss by in terms of whether introducing the surcharge on the higher income taxpayers. So it's a very clear intention notified always at every point in time. As far as housing is concerned, there are definitely a couple of changes, both good. It's a mixed bag altogether.
Anshuman, let me draw you in as well. Housing, was repeated so many times in the speech, whether it was granting infrastructure status to affordable housing or a couple of the tax changes that we've seen. But your opening remarks.
Certainly this budget gave a very strong message that housing is an extremely important part of the economy, and it's about time that did that, because housing can make a huge difference not only on the GDP growth, etc., but on productivity, on health. So therefore this really they gave a great message, especially for many years the industry was demanding for infrastructure status for housing, and that finally came through. Although I must say it came through on the low-cost housing side, but at least it is a start, it's a step in the right direction, and that infrastructure status itself shows that, how important housing is. Besides, of course, there was talk about Airport Land Amendment Act, which will hopefully monetize a lot of land which is lying there at the airport. There was talk about railway station redevelopment, and overall, even on talking about on the fiscal deficit side, which is, if they'll put it up to 3%, which means hopefully inflation will be under check, which again indirectly and directly impacts the economy and the housing sector.
Well, absolutely. That's the hope and expectation of every prospective buyer. More homes, that means more rational pricing, and everybody can go and get their dream home. But let's talk about perhaps the biggest announcement, and that is the change in the definition of long term. Now, earlier, if you were holding a property, you had to hold it for at least 3 years, if not more, to enjoy certain benefits that come when it comes to capital gains taxation. That definition has now been tweaked to 2 years. Parizad, help us understand, first of all, what this means and whether this is a beneficial thing.
So actually, as you rightly said, for immovable property, the period of holding to classify it as a long-term capital asset was always 36 months or 3 years. Vis-a-vis your equity shares, even your unlisted equity shares, last year they changed it to 2 years. So as an asset category, immovable property, definitely the period of holding has been truncated. What this translates into is that, how long-term capital gains, if you sell the property, now you need not wait for 3 years to get the benefit of the reduced rate, because there's a way in which there's always a reduced rate for calculating long-term capital gains. That is one change as far as real estate is concerned from a tax perspective. The other thing you may have read that, the base year for calculating the index cost of acquisition, because long-term capital gains is, nothing but the sales proceeds minus a particular way of calculating the index cost of acquisition. Actually, there was for all properties. Sometimes you inherit property, people gift it to you, and if you have an old ancestral property which was acquired much before 1st April 1981, which is currently the base year, that base they have shifted to now 1st April 2001, which is the right and the welcome move, because it's just making the date more realistic. So the base year has shifted, and of course the index cost will be pegged to that. So you can either take the cost of acquisition or the market value of the property as on that date.
Any guesstimates how much lower? I mean, though this math will work out, I guess, case to case.
No, it is case to case, but they will come out with inflation indexes, because it also depends on the year in which you sell the property. If you don't sell it this year, if you sell it next year, then the sales price also has to be linked to the year in which you sell. So there will be an inflation index for that year. But largely what holds true is it will be better off in terms of a reduced capital gains. But of course the maths has to be seen.
Okay, fair enough. So Anshuman, the tax expert tells us that there might be some relief, at least a minor relief, if you are looking to transact or sell your property and the way you have to pay tax on the capital gains. Is this going to mean anything material for the transactions that we are seeing in the market? Will they go up?
To some extent, but it's also a function, besides the tax, it's also a function of how the market is doing. So right now, if you look at the residential market, the sales are slow, which everybody knows. But certainly it will encourage some of the investors. So for example, people who have invested in the second, third house, and they need money or they want to reinvest, certainly there will be some inventory which will come for resale, because now they don't have to wait for 3 years, they will save tax. But I don't see a significant impact, but it will certainly help people who want to liquidate their assets sooner.
All right, so that's all about the capital gains and how the new calculations are going to apply on immovable property. We're going to take a break, but on the other side, some not so comforting developments that have come your way because of Budget 2017. Housing is what we're focusing on. Back in a moment.